cash generating units. I want you to please focus on the right hand side of your screen, and we will work through our principles of CGUs. You will identify in your lecture notes that I have provided you with this diagram on a clean page. Now guys, please open this page and ensure that you still have the one-pager revision with you as well. Now, what do I mean? You will have 2 pages open next to each other on your desk. You will have your revision page, and then you will have your diagram. Why? Because I want you to use this diagram to add my explanations and to study and ensure that you understand what is a CGU. Now, I have already copied this onto a clean page for explanation purposes. First, I am going to read through the theory with you. Then I'm going to explain the theory. Guys, CGUs are extremely important, and based on my experience, I know that there's a lot of students that struggle to identify CGU. Therefore, I am going to spend a bit of time on this. Now, what are they? Where future cash flows cannot be attributable to a single asset to establish the recoverable amount on a reasonable basis. Then it is necessary to identify the smallest cash generating unit to which such cash flows can be attributed. A CGU is the smallest identifiable group of assets that generates cash inflows that are largely independent of the cash inflows from other assets or groups of assets. Okay, now guys, when you look at your left top corner, if we have one asset and we are not able to determine the recoverable amount, remember the recoverable amount is the highest between your fair value less cost to sell or your value in use. Now, we are not able to determine the recoverable amount of that one asset. We need to be able to identify if that one asset falls within a group of assets. Now, what does this mean, guys? Normally, we will require a group of assets to produce a certain product. Therefore, let's say, for example, we have asset number 1 where we mix liquids. And this should be moved to asset number 2. And these 2 assets are able to generate cash on their own independently from the other assets in the fabric. Guys, now this is what it means. If we cannot identify the recoverable amount on a reasonable and consistent basis of one asset, we need to ask ourselves the question, maybe this asset falls within a group of assets. Now I'm going to explain this by means of a very basic example. We have a company, and let's call this company ABC Limited. Now this company has 2 divisions, Division 1 and Division 2. This entity manufactures KitKats. Now guys, you will remember this is the 4 wafers chocolate. Okay, so I'm using this as an example. This is the 4 wafers chocolate, and the KitKat is manufactured in Division 1. To be able to do this, they need 3 machines. Asset number 1 is a mixing machine. Now important, guys, and you need to read the information provided. It's a mixing machine, and this mixing machine is programmed based on the recipe that they use to mix the sugar, the oil, the milk, water, and so forth in certain quantities. Once they have mixed the liquids, this will be moved to asset number 2 on conveyors. And asset number 2 is our molding machine, which molds, and this is the form, the 4 wafers. The liquid gets thrown into the molds to set. After this process, it's moved to asset number 3, which is a specifically designed fridge. Now guys, important, this fridge has been specifically designed in terms of temperatures that works with this recipe to ensure that this KitKat has this smooth taste. Okay, now we need to take this one step back. If the question requires you to discuss, is Division 1 a CGU? Where do you start? 1, you need to include your theory. Now, you need to be able to identify if each of these assets, which will be our single assets, we will be able to calculate a recoverable amount on a reasonable basis. Now, let's have a look at asset number 1 first. Asset number 1 is our mixing machine. Now, important that you read the information. If they indicate to you that this machine can only mix the KitKat liquids and sugar and all of that, guys, if it can only mix, therefore, guys, it has to work with asset 2 and 3. We cannot sell the mixed chocolate to an outside party. Then you need to be able to identify that asset number 1, we cannot calculate the recoverable amount on a reasonable basis. Then we need to move on to asset number 2. Asset number 2 are molds. Guys, this is the KitKat mold. The copyright will be with this company. Therefore, they cannot use this mold without asset number 1 or asset number 2. Therefore, guys, they will not be able to determine a recoverable amount. Asset number 3, this fridge is specifically designed. Therefore, no, guys, we need asset number 1 and asset number 2. Therefore, based on purely this, you should be able to conclude that this is a CGU. Now, when we refer to our cash flows, it is important that you list your theory. It has to be independent. Now, when you look at this CGU1, these 3 assets will be able to generate cash inflows on their own. Why? Because they produce the KitKat that they can sell, and they can sell the KitKat to an outside party. Then the next question, if they sell the product internally, you need to read the information that they provide you in a question with, guys. There has to be an active market. Now, what does this mean, guys? Another very basic example, and this actually does happen, is let's take a household good, for example, washing powder. Okay, so the first batch of mixing washing powder, where they mix certain chemicals and so forth. This batch can be divided into 3 different batches. Now, in the first set, let's call this batch A. They will add, for example, an additional chemical, and they will sell this as washing powder A. In the second batch, let's call this B. They will add coloring, and they will sell this as washing powder B. And in the third batch, batch number C, they will add an additional chemical as well as a color, and they will sell this as washing powder C. But everything started with batch number 1. Okay? Now, if, for example, this batch can be sold internally to another division, from division 1 to division 2, if you want to debate and discuss if this is possible CGUs, division number 1, guys, and they indicate to you that you sell the product internally, therefore you sell this basic product to division number 2, where in division number 2, they add the chemical for product A. There has to be an active market for this product. Okay? Then number 4, cash flows. Management has to use the best estimate of cash flows. Therefore, guys, important that when you list your cash flows, the fact that this small group should be able to generate their own cash flows. You need to include your theory. It has to be independent. The cash flows should be from outside parties. If it is internal, there has to be an active market. And estimates should be the best estimate used by our management. Now, this is going to be your theory. Then, second step, you need to apply this based on the information that they have provided you in your question. And important, C, you need to conclude, yes, this is a CGU, or no, this is not a CGU. Okay, guys, therefore you need to ensure that you understand the information provided. My recommendation is include your diagram. Ensure that you understand the flow of the transactions and ensure that you list your theory to work through. Now, let's just quickly take this one step back and let's apply these 4 criteria to our KitKat CGU, our division. Now, if we look at number 1, is this independent? And we only look at asset number 1, guys. Asset number 1, no. We cannot sell this chocolate mix to another entity. This mix has copyright protected and they did not indicate that we can sell it. But, guys, if they indicate to us that they can sell this to a separate entity outside, this is another story. Then it might be possible that we can calculate the recoverable amount on a reasonable basis. Okay. Now let's have a look at number 2. Cash flows from parties outside. If you look at the scenario as is, no. But if they have a contract, yes. Okay, guys, I'm pretty sure you get the hang of this. Let me know if you have any questions on CGUs. It is extremely important that you are able to identify this. Now we are going to look at our steps when calculating impairment on CGUs. Now that you understand what is a CGU, let's have a look at impairment of a CGU. What is our first thing? We need to identify if there is an indicator of impairment. If yes, we need to test for impairment. If we have identified that there is impairment, third step, we need to recognize the impairment proportionally to our assets. Carrying amounts. Important, guys, in terms of the carrying amounts of your assets. Now, when we test for impairment, our step number 2, I have listed steps within step number 2. Your first step will be that you will have to calculate the carrying amount of the CGU. Therefore, guys, it is extremely important. You need to be able to calculate the carrying amount of your separate assets within your CGU to be able to calculate the carrying amount of your total CGU. And in your CGU, there can be liabilities as per our IFRIC 1 dismantling costs. There can be goodwill. There can be head office costs. Now, what is head office costs? This will be, for example, if we have 2 CGUs that share the same building. We need to allocate this building's carrying amount to CGU 1 and carrying amount to CGU 2 based on the percentage occupied. Therefore, you need to read the info. Then step number 2, we need to calculate our recoverable amount. This is exactly the same as per a separate asset. We need to calculate the recoverable amount of our CGU. Step number 3, identify if the carrying amount exceeds our recoverable amount and calculate the impairment amount. Step number 4, allocate the impairment to the separate assets. How? Based on their carrying amounts. And then do not allocate an impairment to your liabilities. Okay guys, this is a principle, you need to know this. When you allocate the impairment to the assets, you will first allocate to Goodwill. What do you need to remember with Goodwill, guys? You cannot reverse the impairment. Remember, you cannot reverse impairments on Goodwill. Second step, allocate to your other assets. Now, stop. Guys, very, very, very important. And this is paragraph 105 in IAS 36. Ensure that you know this paragraph. Guys, and you need to think about this one, please. Don't forget to test. They like to include this in your questions, and they're not going to tell you, please test paragraph 105. No, guys, you need to be able to identify this. Now, what this paragraph indicates to us, and I'm going to write this on our right-hand side, when we allocate our impairment to our assets, this value after impairment, that value cannot be below the higher of 1 of fair value minus cost to sell, 2 the value in use, or 3 null. Okay, now I have included this, guys. It cannot go below the higher of these 3. Now, let's say, for example, we have allocated the impairment, and now our new carrying amount is 80 Rand. Okay? But when we look at paragraph 105, the highest of these 3 is an amount of 90 Rand. Now, what this paragraph indicates to us is this 80 Rand cannot go below the 90 Rand. Therefore, you can only impair this asset to 90 Rand. And this 10 Rand should be allocated to your other assets. Please remember to test this. It's very important. Let's have a look at Goodwill. Goodwill can either be allocated to the CGU or not allocated to the CGU. Now, if it is allocated to the CGU, within each CGU, there will be a portion of Goodwill. Now, what do you need to remember when we impair? You need to allocate first to the Goodwill and then to our remaining assets. Now, guys, extremely important. When we look at option number 1, where Goodwill is allocated to the CGU, when will you test for impairment? When there is an indicator and annually. Why? When you think about our basic impairment principles, remember, you will test for impairment when there's an indicator, except for Goodwill. Goodwill should be tested annually. Therefore, if there is Goodwill included in a CGU, you need to test for impairment annually as well as when you identify there's an indication. If our Goodwill is not allocated to the CGU, guys, this is option number 2. Our Goodwill will be included in the group. You will only test for impairment when there is an indication of impairment. Therefore, it is important that you read the information provided and that you are able to identify this in a scenario. Guys, this is a good discussion question. They like to include the Goodwill, the steps that you need to follow, your paragraph 105. Please ensure that you know these principles. They are extremely important. We will look at a detailed example on this as well.